First off, let me quickly welcome on board Mr. Umesh Revankar, who's the Executive Vice Chairman at Shriram Finance. First off, thank you so much and good morning, sir.
Good morning.
So, I want to first off try to understand, give us the larger rationale for this transaction and for this divestiture of the housing finance arm.
Basically, our business model has been to lend to businesses and for acquiring vehicles for using it for businesses. So all our lending activity has been to run the business or acquire an asset for making a living. That has been the business model, and we would like to focus on the core business. Housing business is something which we started, and it is done well, and it is growing very fast. It is growing more than 50% CAGR, and that also needs fresh capital. And we are also growing fast. We also need capital. So we felt that it is a right time. If we get a good price, then we can we can find a new partner to the housing finance is what we felt. And that's how we have been looking at the market. And as and when we found there's a good price with a good partner, then we felt that we should divest fully.
Sure, sir, but sir, why not? There was always a plan to divest, maybe partially. So what really changed from the partial divestiture to a complete sell-off of your entire stake?
The housing finance is a highly specialized business, and it needs a total focus, and it needs a promoter or the partner who can really add a lot of value to the business. And in that context, we have been looking at total sale. And Warburg is a well-known investor, and they have a past good record of investing and making the business successful. And therefore, we felt that this is the right time to divest fully.
Right, sir. Sir, just with regard to what this does in terms of your capital ratios, how does this build on to your capital adequacy, which is already quite strong? And how does this basically also give you a runway? And for how long does this give you a runway in terms of growth before you raise fresh equity?
We are at 21% CRAR, and this will add another 1%. So it will give us a little longer time before raising further equity. Maybe a year or two, this should help us to grow our business without raising further equity. It also depends upon the market. And generally, capital adequacy as per the regulation is 15%, and we are at healthy at 21%, and this will add another 1%. So we don't have any urgent need to raise further capital, but depending upon the market condition growth, we will look at capital raising.
Understood. So just with regard to valuations, you've sold your stake at around 2.5 times current trailing price to book. Do you believe that there was scope for a better valuation, given just the way in which the market is currently sitting at, and the way in which listed companies are shaping up in terms of housing finance valuations and the size of the book and the growth prospects?
We have been looking at the partner investor for last few months, and we found that Warburg is a good partner to come in and help the current management to further grow the business. That's very important for us. And plus, as far as the valuation is concerned, we are quite comfortable, happy with the deal because the company also needs another 1,000 crores equity immediately. So it is not only that the current valuation, plus it needs further capital of around 1,000 crores for further growth of the company. Considering that, we felt that price is adequate.
Okay, I take your point, sir. So will there now, therefore, as a consequence of this, be a greater and larger focus on the existing business, which is what you seem to underline, and therefore, what will be the impact of that? Because even a part of the management has now moved, which is the housing finance division's management has moved along with the company, and therefore, likely you will be focusing more on the existing businesses. And therefore, do you expect to build more traction, make it more efficient? What's the plan now?
Yeah, that's exactly what we wish to do. We wish to focus more on the bottom line growth. We want to bring more efficiency, better processes, and more digitization so that the bottom line growth improves further. Uh, so that's the idea behind the entire deal.
Sure, sir. Um, okay, understood. I take your point. And with regard to growth expectations for FY25, could we expect something in the mid-20s in terms of the growth number?
No, we have given guidance of 15% on AUM growth, but the bottom line growth will be we are trying to highlight.
Yeah, absolutely. So, yeah, fair point. So, sorry, on bottom line growth, what would that number broadly be at, your sense?
We should be growing more than 15%. I can't give you a
Sure.
ballpark number right
Sure,
now,
sure,
but
sure.
it will definitely be much better.
I take your point. And with regard to your various verticals, would there be a larger enhanced focus on any particular vertical to try and unlock value then thereunder?
See, basically, we are into commercial vehicle financing, which are goods transportation, plus we are into passenger vehicle transportation. These are the two major activity we have, plus SME business. And then we also have gold finance as additional line of vertical, which is doing well. Now, the passenger vehicle movements have a good traction, mainly because the tier 2, 3 towns are doing well as per the demand. The credit growth for the passenger